Well, that brings up another point because we were talking while discussing this about, you don't, it's not a binary decision. You don't have to be all in or all out of a stock. You can leave just a portion of your shares in, or you can, buy in tranches or sell in tranches and whatever. And that has actually led me to think, okay, so which is what I did. I left a very small position in this one company that I sold most of my position out of, and I started to think, okay, so when does it become too much? Like, when do I get to the point where I have, just a little bit of a bunch of stocks and I just can't follow them all? I mean, do you guys find that you have a good handle on, how many stocks you own and that you can follow the news? I know that Nick is always on CEO.ca, so he can probably follow all of his stocks and a bunch of other stocks at the same time. But does it ever get too much for you guys?
Yes, absolutely. It does get too much. In some sense, I don't think I'm quite as enthusiastic as Nick. I do my best to keep track and keep tabs on a lot of different companies. This is coming from somebody who, I guess, like I'm not in the 9 to 5 kind of corporate environment anymore. So I do have a bit more free time to kind of monitor this stuff day to day if I really wanted to. But after a certain point, I think it's just well, for one, I think you end up with too many positions, and two, there becomes a lot of overlap, and I'm not particularly interested in that because I don't really want to own like 3 or 4 companies that are kind of the same story. I don't really think there's too much to be gained from that. So, I don't know if there's a hard and fast rule kind of thing, but for me, it's like when I'm over 20 positions within mining stocks, it starts to kind of overwhelm me just a little bit. But I don't let just one kind of number just dictate what I'm trying to do, because like, for example, earlier this year and even late last year, maybe my portfolio was around 18 to 20 positions or so, but then I kind of got heavily into lithium, and then I was kind of skewing more towards the clean energy movement. So I wanted, some exposure to kind of graphite and cobalt and, even uranium for a while. So when you start adding different commodities, naturally you're going to add more and more companies because you're not going to be able to find, a one size fits all. Most of the companies that you're going to get into, they're going to specialize in one commodity. Primarily that'll be their focus. So, when I started getting into clean energy along with the precious metals and gold, silver, and then, copper, maybe lead, zinc. I look at each individual story. It's like, if I have, producers, I kind of ask myself, like, do I need 5 or 6 producers that are all coming out from, Canada or something? Like, does it make sense? Maybe I just need one or something like that. And another question I ask myself, which positions and which companies are prime for, takeover? I kind of ask myself, do I want more exposure in that regard, or do I want more, solid producers that can operate, in a low cost, low gold price environment and, generate lots of free cash flow? Then I also ask myself, how aggressive do I want to be? Am I in this story because, it has, it's upside potential, but perhaps it's maybe a little bit too early stage, so there's a lot of inherent risk involved, and so it's kind of a balancing act, and I guess you put a list of questions together and you kind of go over it yourself, and I wouldn't let just a fixed number dictate ultimately how big my portfolio is going to be, but I don't think it makes sense. With that said, to kind of build this portfolio of like 50 or 60 or 70 companies, because when you get to that kind of size, you're bound to have a lot of redundancy and overlap, and it's not really that efficient, because the law of large numbers kind of stipulates that the more companies you have, you're essentially just going to be building an index fund. So
Yeah.
Probably going to save on fees and expenses and commissions and all that stuff if you just buy like something like the GDX or GDXJ at that point. So,
Good point.
I think ultimately a lot of people don't like to admit it because they feel like you made a bad decision. So people are not so upfront about it. But ultimately I will just be straight up. Like, the whole point of building your own portfolio, in my mind, is you're trying to beat index. If you're not
Mm-hmm.
trying to do that, then there's no point, because there's nothing more elegant than an index fund, because it's kind of buy it and you just hold it.
Okay, so I guess I'll have to come in with a pretty different answer, partially to play devil's advocate, but partially because I guess I'm going in this direction, rightly or wrongly. So keep
We
in
like that.
mind, like I go about this kind of crazy, and I've actually changed my own strategy over the last few years. I would say a couple years ago I was totally on board with keep the stocks, keep it limited, stay focused, like don't go all over the place. I'm kind of on board with that, but like already I've been crystal or as clear about as I can about my focus. Like I'm all about gold exploration in these far off lands and things that no one is talking about. I do like looking at other stuff, but within that world, it's just incredible how many choices there are. And so one of the biggest things, at least I'm on board with, and I absolutely do not recommend this for everyone, but I've discussed it a little bit with Jay. When you buy a stock, even if it's a small amount, and for different people, it's it could be just a few $100s, but for me, like $1,000 or $2,000, that is quote unquote a small amount, but it is significant enough where it has to stay on my radar. And so like I'm willing to lose money on that, lose hundreds of dollars on this small position, and sometimes not even know that much about it, but because it's closer on my radar, I just start to more subconsciously pay more attention to it. And I think that's where having the skin in the game, having real money in it, like when you start to pay more attention to any position you have, whether it's a big position or small position, versus stocks that are that you just don't have anything in them. And so I also only have 20 or 25 positions right now, but really I would be open to having 50 positions. And again, this is only if you have a lot of time, but I do, like, when I get excited about these things, I just go hours and hours, and sometimes late at night, studying them. And I know a lot of people are not willing to talk to the CEOs, or call them up, or like really just pour through some of the SADAR type stuff. But if you are, I'm just saying, I think it's okay to have like 50 positions, but again, this is unusual. I have a few core positions that are huge, and then I have all these little positions that they're all kind of competing to be the bigger position. So this is I'm not recommending this, and honestly, I don't think anybody else like kind of does it the way I do, at least not publicly. But I just wanted to throw it out there. You can do things completely differently, but you want to have a good handle at what you're good at. And as a side note, like I would never go into these marijuana stocks. Like I mean, that is the hot thing right now. So like it's just that is a constraint. That is even if I see one go up 10 times, I don't know enough about it. There's way more people who know more than I do. So I do have constraints, and like I'm open to more stuff, but I know for me, gold exploration and far off places, that's like the bread and butter. And there's actually surprisingly little correlation between a lot of them, because it's more based on country risk and other things. So just wanted to kind of throw that all out there.